Good morning. Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the MarketSite in Times Square is Gerard Birmingham. He's executive director and head of corporate actions of North America with IHS Markit. Gerard, thank you for joining me at MarketSite today. And let's talk about corporate actions. Are you continuing to see increased activity in this space?
Absolutely, Jill, and thanks for having me. Definitely, this year alone, 2018, has been a record year for mergers and acquisitions, and that record increase in the number of mergers and acquisitions has that knock-on effect into increasing the volume of corporate actions. And actually, what that's also bringing along is a lot of complexity around what they're doing within those mergers and acquisitions. We were talking earlier about Brookfield as a property organization. They're actually recently merging with GGP. And what they've done within the options associated with that merger, they've added an additional dividend. So all of that adds to the complexity of how you process those events, how you manage those events, and make sure that the shareholders get the correct allocation and the correct outcome of the corporate actions. And the interesting thing is that we continue to see, particularly in the operations side and the back office, that corporate actions remains the last bastion of the manual process. So people are still continuing to utilize spreadsheets, utilize paper, and reviewing things by hand and eyeballing information just to determine what's actually happening in relation to that particular corporate action.
Right.
That creates a lot of risk as well, and that adds risk to the whole process, and ultimately can result in organizations losing money because wrong decisions are made, wrong information is provided to clients, and clients are making wrong decisions. So what we're doing and where we're working with a lot of organizations, particularly on the sell side of financial services, is to help them to automate that process and automate how they reconcile the positions that are managed by that particular corporate action, reconcile what they need to distribute to the street side, reconcile what they need to allocate to their clients, reconcile what they need to have from a what they call a substitute payment perspective, where you may owe something to a lender, or a borrower may owe to a lender. So there's a whole lot of complexity around that, and understanding how that works, and doing that manually just creates a significant amount of risk, particularly because corporate actions, as people know, there's always a time and deadlines around managing that corporate action. There's deadlines around making sure that the decisions are made and distributing those decisions. So having to do that in a manual process creates risk, and as I said earlier, creates an element of where calculations can be wrong.
Right.
So we're working with a number of organizations where we've automated that process. We do it right from the announcement of the event. So we have a validation service where not only are we taking in information in electronic format, we have a team of people who are managing and reviewing that information to really ensure that the content that goes out to the decision makers is the correct information. Getting it right at the beginning really has that impact of making sure that the decisions are going to be right at the end.
Now, I would imagine, due to the complexity around corporate actions, it could make automation a little bit more difficult, and it's not a one-size-fits-all kind of model, right?
And that's a great point. Yeah, that's why corporate actions remains so much of a manual process within the operations and back office side of things, because no one fits all. Everyone is different. The decision makers who are deciding what the terms of the event are going to be, they're not necessarily thinking about what's going to be happening from a back office and operation perspective.
Right.
They're just really making sure that the shareholder value associated with this corporate action, the shareholders are going to get benefit from what the outcome is. The shareholder has the option to make choices about what they want to do. So again, going to that Brookfield example, by adding this additional special dividend in there, it just made sure that shareholders were getting that additional element a part of the corporate action. And that was included in all of the associated options, but it wasn't always necessarily outlined correctly in those options, so it could create mistakes. We picked that up as part of our validation service and make sure that the guys got that information out correctly to their clients and distributed that correctly. And then, yes, because it continues to be no one size fits all, we create a significant amount of rules within our solution and put a lot of ability for users to define those rules. If the rule isn't met, an exception is created, and the user can review that exception and resolve it. And that rules is really looking at it from an automation perspective, somewhat from a robotics point of view. So the rule is determining what's happening in this case. Does everything that's contained in the rule get met? If not, create an exception. If it does, great, then move on to the next stage. So there is that automated level, but the complexity adds to, there's not one rule fits all. You have multiple rules, and be able to decide that and determine that still needs people to put that.
It sounds like you're making the process more intuitive as well.
Absolutely, yes.
Right, and so to wrap it up here, Where do you think automation and services for corporate actions are going to go in the future? Is there going to be more of a focus on back office operations?
Definitely, we're seeing a lot of focus in that area. We're definitely seeing organizations now realizing that they have to overcome this risk. They can't continue to lose money because of errors, so they are looking at automation of the process. We are doing in other regions, particularly in APAC, we're also looking at actually automate the process right from the beginning. So the issuers themselves providing an electronic format of the notification, getting that distributed right through to the final decision maker, to the final investor. And that again, is an area where it'll overcome a lot of the interpretational issues, interpretational risk by getting it straight from the horse's mouth, as it were, to get the right information passed through to the investor.
All right. Well, thank you very much for joining us at
Thank you.
MarketSite. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.